Hi and welcome to another edition of TraderCast's weekly market report. Let's start with the chart straight away. Is euro dollar impacted by ECB's failing policy? Eurozone fundamentals remain weak. European economy is contracting and all the pressures are now on ECB's shoulders. Current monetary policy is failing and it's failing to deliver expected results. The next ECB meeting is on 21st of April and that should not trigger any kind of major moves in this currency pair. Because expectations are and market participants believe that ECB is already committed as much as they can be unless they surprise with something. So the bullish outcome could trigger a further upside resistances towards 114.75 followed by 115, maybe even 115.80, 115.82 over the coming weeks. Important downside support is clearly defined by this one spot 13.40 followed by one spot 13.20, one spot 13. Current European ECB monetary policy is annoying Germans and Germany economy is actually quite strong and remains solid. It seems to me that a German finance minister considers that other countries are benefiting from the current monetary policy and that's clearly visible in the performance of DAX or German 30 index. DAX appears to be under pressure. It's still in a clearly defined downtrend and it appears to be bearish. Initial resistances appear to be at 9,700 followed by 9,800 in end of day time frame. Alternatively, if the price dips lower than initial support is at 9,500 followed by 9,400 followed by 9,374, and these levels would be considered to be a fib retracements as well from a technical point of view. Some oversold bounce backs would be more than welcome. But we have to wait and see if the price breaks through this 9,700 level first. Since the beginning of the year, gold price has increased very sharply and it's currently trading between $1,200 $1,250 per troy ounce. Regarding US rate hikes, market participants were led to believe that euro dollar should have strengthened and that should have really be bearish for gold. But gold really rallied sharply since the beginning of the year on concerns for the global economy in general and Chinese economic data. So gold is currently capped in end of day time frame by 1250. A daily close above that level could potentially incentivize bullish traders to engage and potentially target further upside resistances towards 1280 and 1300. Alternatively, if the price holds that current resistance at 1240, 1250 and we see a dip lower, the logical downside supports are located at 1220 followed by 1200. The last thing that I want to talk about is crude oil. Obviously, all eyes are on a meeting in Doha. Price action is moving above its shorter term consolidation range, but it's clearly defined as bearish because it's below this falling 200 period moving average in end of day time frame. So end of day resistance is clearly at 42. Longer term view for crude oil is still pointing to continuation of this downtrend based on fundamentals, based on supply and demand, although last week's inventories surprised everybody. But everybody's waiting for this meeting in Doha. So strong resistance is at 41, which is that 200 period moving average, followed by 42 and 42.61 for the front-running month for the front-running futures contract. Alternatively, if the price dips lower, then the initial downside support is at 38, followed by 37. Hopefully you've enjoyed this.
I'm looking forward to talking to the members during the live trading broadcasts on Monday from morning 9:30 until 11 and 1:30 until 4 o'clock. For the rest of you who are just watching these videos, thank you for listening. Stay safe and enjoy your trading for the next week.